While gold, which is now perched at an all-time high of $2,570 per ounce, which is a spike of more than 20% this year. What's really driving these glittering gains for the yellow metal? Gold, well, definitely is a preferred asset to bet on when there are uncertainties. But we're joined by Santosh Rao, Head of Research and Partner Manhattan Venture, joining us. Hi, Santosh. Thank you so much for joining us. Santosh, gold, it's sitting, it's glittering away. You know, it's perched at its all-time highs. Firstly, a simple fact is that gold is rising because of it's in a bull market now. From a long-term perspective, is this gold uptrend firstly intact? And secondly, what is going to really drive these gold prices higher?
Yeah, good morning. Like I said, the combination of events. I mean, gold has always been a safe haven investment. So that was always there. That was their base case. But then something incremental has happened lately. The sovereign funds, the countries, the reserve banks have almost tripled their gold buying pace. So I think that's kind of adding some nice floor and nice tailwind to this whole thing. And then I think it's just I think another big driver is the uncertainty regarding the U.S. markets, especially is there going to be a recession? There is talk now that we may have a 50 basis point cut as opposed to 25. So does the Fed know more than what the market knows? All those questions keep arising. So in this uncertainty, gold has always been a good safe haven. So net, I think it's more than just a safe haven trade. It's about very prudent portfolio management. Have your nice safe haven trade in there and make it part of your portfolio in terms of a diversified portfolio.
Right. Also, what levels do you see gold touching by the end of this year? Where do you see gold perched at?
Yeah, I mean that's always tough to say, but it's generally the path of least resistance is up. So you can say that. I mean, I don't follow, I'm not a gold trader as such, but in terms of just the fundamentals, the macroeconomics and the tailwinds and looking at the cross currents, I think getting closer and closer to 3,000, not necessarily by the end of this year, but towards that, at least by the middle of next year, looks like it's definitely on the cards, but we can never say. Gold has always disappointed in the past. It has gone up, gone down, but this time there looks to be some real secular tailwinds behind it, considering that a lot of these emerging markets, developing markets, they have debt that is rising. They're worried about their own currencies, so they may want to just kind of hold on to these gold as a safe haven trade. So that's playing into this as well. So those are incremental tailwinds that are coming in that will support the gold prices going up. Whether it's 3,000 this year, by next year, I don't know yet, but it's definitely the path of least resistance is up.
Right. Also, Santosh, investors often turn to bullion in a low interest rate environment, right, as insurance in the times of geopolitical uncertainty. So the upcoming Fed's rate cut, they're likely to augur well for the gold prices now. Now that the prices are already elevated, how can investors get in? You know, if they have already missed the bus.
Yeah, I think you get in here. Gold it's not a get rich scheme anyway, has never been that. So it's a safe long-term investment. So you can still be in here. Maybe at this point, if the rates keep coming down, you're not going to get much interest. So you may want to park your money in here as opposed to just kind of losing some value of your portfolio. So the gold will continue in bad times and good times, especially during bad times when the currencies devalue and this and that. But I think they're good anyway. But this time around, unlike in the past, we have some traditional have other tailwinds behind it. Like I said, the reserve banks really doubling up on their reserves on gold, and all these cross currents and geopolitical events and uncertainty and the recessionary winds may or may not happen. But at least it's a dark cloud of recession is always hanging, is overhanging at this point. It hasn't passed away. We don't know how far it'll go. Are we going to see the lag effects of whatever was done in the past? Are we waiting for that? Or has it passed? Or it's not going to happen? Is it going to be safe landing or it's going to be hard landing? Those are issues that need to be handled. And if a conservative investor, a prudent portfolio manager will have good share of his money in gold in the hope that it will continue to going, and which it is expected to go. So like I said, it's going to go up, maybe not very fast, but it'll continue to go if things are. I mean, the speed is really an unknown, but like I said, the path of least resistance is up, so it'll continue to grow.
All right, thank you so much, Santosh. Thank you so much for joining us and weighing in on the gold prices. We will have to let you go on that note.
If you like this video, then like, share and subscribe to ET Now.